The markets did exhibit a good bounce back from lower levels in this week, but the recent statements done by the Exchequer today and the lack of clarity related to debt mutual funds, GAR, and the implementation of GST had some amount of profit booking in the markets on Friday. In the coming week, I think there are a lot of results coming through. A lot of FMCG companies are going to post their results. A few of the bigger private sector banks and even a few of the larger infrastructure companies will also need to grow. In the week gone by, I think a few banks have posted a decent set of numbers. Axis did disappoint on the asset quality, and Yes Bank did provide a stable set of numbers. But overall, I think our sense for the markets going forward is that a lot will depend on how the corporate earnings will pan out. Clearly, I think in terms of policy formulation, it will take some time for the government to start implementing policies, and the same will take at least 2 to 3 months. So in that sense itself, I think the triggers for the markets are very few and far apart, and whatever will be left will be in terms of corporate earnings coming through. So it will be a very stock-specific action for the next 2 to 3 weeks going ahead. And again, I think next week being expiry, I think you might expect a lot of volatility into the markets. Our take it is that the market should end the expiry somewhere around the 7,800 mark. And clearly, I think if there is nothing else to provide an impetus to the markets might just see a slowdown or even a correction going forward. So in that sense itself, for a broader theme, I think for the next 2 to 3 months, our take is that the Nifty might probably and possibly stay in a range between 7,150 on the downside, and it will be very difficult for the Nifty to cross 7,900. Stock specifically, yes, I think the companies which will post good numbers and beat result expectations can be expected to perform well. In such a volatile markets, I think the only resort that investors have is to rush back to the defensives. And clearly that was what was being seen in IT, pharma and FMCG stocks. But here again, I think our view is that you have to be a little bit stock specific. Going by Biocon's results, I think they were disappointing, but going ahead, our belief is that Dr. Reddy's will be one stock to be watched out for a longer time horizon, which can do extremely well in terms of their earnings outlook. Though the results might be a little bit subdued for this quarter, I clearly think that Dr. Reddy's can be a huge multi-bagger from the pharma space. Clearly within the IT pack, TCS has outperformed the markets, a brilliant set of numbers. The markets are now looking at HCL Tech with Wipro disappointing on all counts in terms of disappointing top line growth and a below par bottom line growth coming in from Wipro. So in that sense itself, I think something like an HCL Tech from large cap can be looked at, and Infosys, it is also trading at a lesser valuation compared to a TCS. So at 15.5 times forward at 516, Infosys looks like a good bet. So clearly I think the entire theme for the coming week will be driven by expiry. We expect the markets to stay probably in a range and probably the markets to correct. So you have to be very stock specific, select stocks very, very carefully, and don't go for aggressive buyouts in companies which are highly leveraged and which are very inclined towards interest rate sensitives. So I think an interesting week for the markets.